Mark Gatto, co-founder and co-CEO of CION Investments. What is your view on the recently announced Federal Reserve interest rate path?
So I think it's been something that has been expected for some time. I think a lot of people in our business were expecting interest rates to come down. Obviously, there was some friction with the Fed and the administration that everybody was very watchful of. But I do think it's appropriate for the Fed to be doing this at this time. Interest rates have been very high for a while now. We always said higher for longer when we talked about interest rates. I think most people thought that the level of the rates and the rate hikes that had occurred previously were very, very significant, and everyone was accustomed to virtually zero interest rates. So they were expecting it to come down maybe sooner, but then obviously some of the data that was presented in the economy didn't really warrant that. But I think now we're seeing it's appropriate, and you can take two different views, right? You can take the view that maybe some of the data is indicating a softness in the economy. You can take the view that inflation is sort of stabilized and maybe it's time now to sort of test the waters in terms of like how low can we go without really reigniting inflation. So I think all in all, it's a positive for the market.
So, with that in mind, how might wealth and asset managers think about that in relation to investor portfolios?
So we at Scion and I always try to advocate really focusing long term, right? And don't always try to make decisions on things that happen in the marketplace that may have a near term impact or immediate impact, but doesn't necessarily should not necessarily change your long term view of building your portfolio. We advocate diversification. We think a well diversified portfolio can really perform in all market environments. And when I say well diversified, that's really moving away from the traditional 60/40 allocation that a lot of investors are familiar with, advisors are familiar with, and starting to think about alternatives as a core component of your portfolio. We really do believe that the incorporation of of alternatives in portfolios can really deliver the types of outsized returns that you're looking for long term to achieve your investment objective. So when you consider the current market, I still believe that there will be a theme of uncertainty and volatility. It's just going to happen. The news cycle is too quick. The global economy is too interconnected that there are going to be things that happen that are going to bring some sort of volatility to the marketplace. And because of that, we think more than ever incorporating alternatives that can maybe smooth out that volatility and dampen some of those shocks to the market and still deliver a premium yield to sort of our public counterparties, if you will, that it's something that we really need to look into as advisors and investors.
Now, with the current landscape in mind, can you just elaborate a bit on the specific types of alternatives that Scion looks at?
Sure. So Cyan Investments, we have three funds that we uh, sponsor, that we manage, either exclusively through our proprietary investment management team or through joint venture partnerships with leading alternative asset managers. We have a middle market lending franchise that is a listed BDC on the New York Stock Exchange called Scion Investment Corp. That's about a $1.8 billion AUM business. And what that focuses on is the US middle market, what we call the true middle market, companies between 25 and 100, 75, $100 million of EBITDA. And that is an income oriented product. So when you consider interest rates coming down, income is very important. And those sort of investment strategies, direct lending, really lend themselves well to delivering income for investors. Our other product is an interval fund, which is a very interesting structure for the private wealth community so that individual investors can get access to alternative investments, institutional quality alternative investments in a meaningful way. And that is a diversified credit fund. There's a partnership between CION and Ares Management. It's approaching 8 billion in AUM. Again, more income oriented. It's diversified, so it invests across the entire credit spectrum, which in volatile uncertain markets is really a great characteristic to have in an investment product, an investment strategy for the private wealth channels. We can be nimble and dynamic and move in and out of markets depending on where opportunity presents itself and the best relative value is presented, so we can take advantage of that. Again, income oriented, think high single digits. Our other interval fund is really interesting, especially in this environment. And when we're talking about diversifying your alternative allocation, it's a infrastructure strategy where we invest in the equity of a diversified pool of infrastructure assets. And again, that is a joint venture partnership where we have partnered with Grosvenor, out of Grosvenor Capital, out of Chicago, $80 billion asset manager. We just launched that product recently. We have over $300 million in assets in that business and about 40 individual investments directly into infrastructure assets. And we think that's a great way to address some of the other concerns that people have. If you still believe inflation is an issue, if you believe real estate's still not where you want to be because interest rates are still too high and there's not enough action going out there, and to finance these real estate properties don't doesn't make sense. Infrastructure can really provide that substitute. And what's really interesting about infrastructure is that it has some of the characteristics of an income oriented investment because there's stable revenues, predictable revenues, contracted revenues within infrastructure, but at the same time there's upside in growth. So it's a lower income dividend yield compared to private credit, but at the same time we see some capital appreciation, which typically you get in more of a really real estate oriented product.
Now, infrastructure is actually a very broad concept. Can you just give us a little bit of clarity on what for Scion that means?
Sure. So the Scion Grosvenor Infrastructure Fund, we focus on being diversified and investing across the various types of infrastructure assets. So I think most people, when it comes to infrastructure, are really familiar with focus strategies that are either in traditional fossil fuel energy or clean energy, or they're doing toll roads and bridges, more hard infrastructure. And what we do is we approach it with a diversification theme where we want to invest across the entire spectrum of infrastructure assets. So that means clean energy, traditional energy, it means telecom, it means toll roads and bridges, it means airport terminals, data centers, storage, what we call infrastructure adjacent things like social infrastructure and technological infrastructure. And we're able to do that because our partner Grosvenor has the ability to originate and really see everything that's in the marketplace. So we think that's a really good strategy for the private wealth channel because if you were investing in clean energy 3 years ago, that's not looking like such a good trade now, right? So we think that diversification allows us to really be nimble and spread out the risk, if you will, and the volatility that could be present in any investment strategy. And we do that in core plus, value add. Again, we're doing it across assets, we're doing it across asset types. Again, building that diversification, and we really believe it's an interesting opportunity for the private wealth channel and individual investors to capitalize on what's happening in the infrastructure market.
Mark, excellent insights. Thank you for your time.
Thank you, Chris. It was a pleasure.